Hi, everyone, and thank you for joining us today as we discuss if it's time for you to buy your first investment property. My name is Carrie Schultz. I'm a financial advisor at Califano Financial Group, and
I'm Gia Silva. I'm real estate broker of NT Realty and also a landlord.
Now, if you're thinking about buying your first investment property, this is the workshop for you. Well, maybe you're a property owner right now, homeowner, and you're thinking about expanding your real estate portfolio. Or maybe you're not a property owner and you're just wanting to jump into buying your first investment property, maybe living in one unit, renting out the others, or just purchasing and having it completely separate from your living situation. Whatever the case is, this workshop is a great place to start. Obviously, there's going to be like 1,000 different scenarios and situations that we could go through on this workshop, but we wouldn't be able to keep it under an hour. So if after going through this workshop, you feel like you would benefit from a deeper dive into your particular situation, please don't hesitate to reach out to either Gia or myself for a consultation. We'd be happy to help you in any way that we possibly can. Now, when buying your first investment property, the first two things that you should consider are your financial situation and your willingness and ability to live the lifestyle of a landlord. As a financial advisor, I'm going to be focusing on the financial side of the transaction, whereas Gia who is a broker and also a landlord herself, will be going more in depth on the lifestyle of a landlord. Now, thinking about the financial situation, you should focus on two major decisions. The first is, what are your investment goals? What is it that you're trying to achieve? Are you looking for income and appreciation of your investment? Or are you looking to diversify your investment portfolio by adding in that piece of real estate exposure? Realize that income and appreciation can be achieved through many different investment vehicles, right? So when it comes to purchasing a piece of real estate and as an investment, you're really going to want to focus in and look at what the expected return is on that investment property and compare that with what your expected return would be on maybe some more traditional investments. If your goal is to diversify your investment portfolio, realize that there are several different layers to investing in real estate, right? By taking in a step towards owning in a piece of a real investment property, you're going one layer up from passive investment into something like a REIT, a real estate investment trust, right? Buying a piece of investment property is going to take more time, more headspace, more effort on your part than many other pieces of your investment portfolio. But if done correctly, it can be simple, manageable, and fairly lucrative. Here, you just need to decide if living the lifestyle of a landlord is something that you're willing to do. Now, we just went over what your goals are. The second financial decision you need to make is how much of a down payment are you going to put down? Now, this is obviously going to play into the return calculations on that investment property, but we're going to go over that in a little later. But right now, I'm going to pass it over to Gia, who's going to go over the lifestyle of a landlord.
Oh, the lifestyle of a landlord. Thank you, Carrie.
Of course.
So the lifestyle of a landlord. Sometimes you don't know what to expect. When I was thinking about obtaining rental property, I had a lot of thoughts about, okay, we're going to make some money, right? I was really interested in figuring out what could get me cash flow, but also look into properties that were going to appreciate faster than others. But that's really all I focused on, right? The financial part. And so it's so important that when you're looking to first buy your first investment property, you want to definitely know, okay, what kind of lifestyle am I going to be living being a landlord? And is my lifestyle now, my present lifestyle, is that conducive of becoming a landlord, right? So some examples that I can give you guys is, if you're looking to purchase investment property, some of the things that you want to look at is, are you going to self-manage? Are you going to hire a property management company? Are you going to try to understand the forms, the legal forms, just the laws in itself between landlord and tenant relationships? Or are you going to have an attorney, a paralegal that you can call, or maybe even a service where you can actually call to have advice, to have consultations, and even doc review, right? Forms for them to actually review, and you're giving the right notices and the right forms to your tenants. That's just the first part, making sure that you're like covered and protected. Then it's actually, okay, are you okay if you're self-managing for someone, a tenant, to give you a call, at midnight because now they have no hot water, right? Or something hot, the water heater burst. So will you be available for that? Will you be on call 24/7? Will you have a handyman or someone that takes care of it for you if you're self-managing? If you're not self-managing and you want to hire a property management company, do you have the time to start interviewing property management companies, right? Interviewing them, making sure that they're going to take care of your property. And also on the finance part, do you also have finances to cover that, right? For property management. I had a instance where my first investment property, here's some of the things that I didn't know. I had one of my tenants, my first tenant ever, call me, and he's like, Gia, the refrigerator went out, right? Something's happening with the refrigerator. It's not, the water dispenser wasn't working. And so I'm like, okay, let me go fix it, right? Give me the name of the maker, give me the phone number, let us call. So we literally took care of everything. We had someone out to go service the refrigerator, and it was taken care of. And then later, I realized when I attended a workshop for landlords that on the contract, on the rental agreements created by California Association of Realtors, there's actually a section that mentions that if, unless otherwise specified, if you are leaving appliances in the unit, in the home for the tenant, so that's included in the rent, you as a landlord are not responsible to maintain, replace, right? Or repair. Once I read that, I was like, oh, wow, that was so empowering. I had no idea. So some things you have to know, that when you become a landlord, you are going to go through like trial and error, right? You're going to have instances where you might not know what to do or how to approach a situation with a tenant. And know that being a landlord ultimately is a business, right? It's a whole nother business in itself. So aside from knowing your finances of the business, we're also in a people's business, right? In everything we do, we're in a people's business. So now you have to know how to actually deal with the tenant if you're going to self-manage. If you're hiring a property management company, is it someone that's also going to know how to have good human relations with the tenant? So there's a lot of just small little things that people don't think about as you're thinking about owning your first investment property. And then, of course, there's just like a tsunami of things that can happen, right? And again, for the sake of time, you guys, if you want to know more or even have scenarios that you want to discuss, or you've had a friend or a family member that's had a scenario where you're like, I can't believe that tenant did that, right? This is where you should reach out to us absolutely to know more about what to expect in terms of a lifestyle of a landlord.
Yeah.
Yeah.
It's different.
Very different. Now,
Learning curve.
Total learning curve, absolute learning curve. Now, we know that you have to understand your finances. Now you know a little bit of a lifestyle of a landlord, what to consider, what are some of the questions you should be asking yourself. And then there's the part of, is it even the right time in the market to purchase an investment property? So let's go into that. So when we talk about where's the market, how's the market? I get that question asked literally every single day. I would be a billionaire if I collected dollars for this. I literally get asked this question every single day. How's the market? How's the market? But another question that I've been starting to that people are asking me is the market going to crash? Are we going to see more properties that come on the market that can give us some good investment opportunities, right? And so as we're seeing this, we have to take a look at where we're at right now in terms of supply and demand. And if you guys don't know the rules of supply and demand and you see in your handout that you have, the first chart on supply and demand literally shows where we're at in our current inventory and the shortage to actually reach the 6-month mark. Now, why is the 6-month mark important, you would say? Well, anything less than 6 months, meaning all the active listings that we have right now, if they took 6 months or less to sell, we're in a seller's market. That's it, okay? If they take anywhere between 7 months and over to sell, we're in a buyer's market. So where do you think we are if properties are selling between 6 and 7 months? We're in a neutral market, right? Super neutral market. So that chart that you guys have on your handout literally shows you the shortage that we have right now into reaching the 6-month mark, okay? Now, also, if you look at the second chart, the average annual inventory of homes for sale, this is nationally, okay? But we're seeing nationally right now that it's very much correlating with different markets all throughout the country. And then we're going to get really hyper local to show you guys where we're at, not just in Long Beach, where we're at today, but also Southern California, right? LA County and Orange County, okay? The second graph that you guys see is average annual inventory of homes for sale. As you see, our usual average, like average for over 30 years that they've been tracking this, has been right around 4 million, okay? And we're just seeing that right now in 2023, we're at about 3.3. So our inventory continues to be very, very, very low, right? And I'm sure that you're asking why? Why does it continue to be so low, right? Like interest rates are increasing, they have been increasing. And what a lot of folks don't remember is that we went through a huge crash in 2008, and builders right now are still trying to catch up on building new. So there's a shortage of homes. There's not enough and not fast enough. The building of the new homes are not happening fast enough. And that's the reason that we're seeing such a shortage of properties and really low inventory. If we look at just the stats of what's happening hyper locally, right? So let's go micro level. What's happening in Long Beach? This is what's really interesting, guys. So what's happening in Long Beach right now is that in 2022, so just a year ago, exactly a year ago, we're going to take it like summer of 2022. There was about, let's take August 2022. There were about 236 properties that sold just in the city of Long Beach. Okay, 236. Okay. In 2023, we've had about 200. So about 36 homes less. Okay. Now check out September though, where we're at in September year to date. We had 263 homes that sold in 2022. This is all just residential, so single family homes, condos, right? Townhomes, we'll get into multifamily. A year ago, 263 sold. This month, September, are you guys ready? We're only at 92.
Wow.
Okay, and we're almost at the end of the month.
Wow.
Right, so that's less than half of the homes that sold last year. So that just tells you that in a year, we have less inventory, right? So the question of, but last year we were at like 5%. Right now we're close to 7%, and yet the demand is still that high. Absolutely. And as you guys can see, it's very organic. It hasn't been forced. It hasn't been artificially inflated. It's very, very organic. So that's something to really pay attention to. In terms of new properties coming on the market, the good news is that in the last few weeks, just in the city and Long Beach, and then we also looked at numbers for Southern California, we're actually having like 4 to 6% more now every single week. So we're increasing inventory, right? That's the good news. We're going to be seeing more homes on the market. Not sure if you guys have noticed that literally in the last 3 weeks, every single week, there's more properties that are coming new on the market. So that's good news. Very good news. Then we talk about, okay, all right, so we know that there's a lack of inventory, right? That doesn't mean that there aren't opportunities out there, okay? And we'll get to talking about opportunities and how to actually see them, right? But let's take a look at interest rates and let's take a look at predictions and what history has actually told us. And I love what you said the other day when we were chatting about this. It was like, history doesn't always repeat itself, but it always rhymes. And it always rhymes. I love that because I actually used to say history repeats itself, but I agree with you. It actually rhymes. And this can kind of draw out what Carrie's saying, because if you guys look at inflation, okay, let's just look at inflation and the 30-year fixed mortgage. If we look at inflation and you go all the way back to the 70s, super interesting, you see that when inflation is happening, right, it's on the increase, what happens immediately after, or maybe just with a little lag, what happens then? Interest rates spike up. Do you see that? The moment inflation is down, then interest rates follow to come a little down, right? So you guys will see that in the interest rates. If you take a look at where we're at in 2023, look at 2022, we were like up there, inflation, right? 2023, we're seeing that we're coming down. We've actually come down. Look at where interest rates are. So what can we predict? That's right. We can predict, maybe not anytime soon, right? But we can predict 12 months. We don't have a crystal ball, but we could see, like Carrie said, it rhymes, right? So interest rates may also follow and start dipping. So we've discussed how's the market, where the market is today. We know that you guys have to look at your own financial situations. But what about the financing options or maybe different strategies that someone can take to buy investment property? So Carrie, let's go through like minimum down payment, for example, right?
Sure.
So what's the minimum down payment you would say across the board for what is it? It's like a range of, depending on property type.
Yeah, so depending on the deal, obviously the amount of down payment, your credit score, what type of home it is, you're looking at between 15 and 25% down on the property. Now, where you come up with that down payment, I mean, you have a plethora of options, right? It could be that you've got other investments that you're planning on repositioning. Pay attention to taxes. It could be that your family members are giving you a gift. It could be an inheritance. Yeah, thanks. Hit up Uncle Joe. You know, hey, come on, you were good this year.
We just helped the client, actually.
Oh yeah.
So we just helped the client, guys. So this is smart. Okay, this is like super, super smart. I'm speaking to a lot of parents that are sitting on. They've owned their home since their 70s, the 80s, and they're sitting, I mean, on hundreds of thousands of equity. Some of them, about 54% of homeowners right now, have about 55% of equity. And guess what? Out of that, about 24% have their property free and clear. That means they owe no mortgage whatsoever. Okay. So sweet couple wanted to buy, didn't have the down payment. The parents, full of equity in their home, have no idea what to do with it, but want to help their children, right? So what do? They took out a HELOC. They took out a HELOC, right? Yep. They took out a HELOC on their home to now use as a down payment to help out the daughter.
They leveraged that equity and took advantage of the interest rates. Just because interest rates are 7 doesn't mean that they're still not historically low, right? Yes, it's been 40 years since they've been around these levels, but they have been higher. I mean, I think my grandparents told me they used to pay like 20% on their first home.
Yep.
So, you know, leveraging your equity, taking advantage of the assets that you have, that's where you're going to come up with that 20% down. But whatever the case, whatever situation you are, just make sure that the numbers make sense, right? The numbers make sense so that you can achieve the goal that you set out to achieve, especially when dealing with repositioning assets. You want to pay attention to the taxes because Uncle Sam will have his hand out. for his cut of those capital gains.
I know what goes down.
Exactly.
In terms of programs and details, let's get into some of the programs that are available right now for investment property. One that I particularly love is the VA program that they still have for veterans. So if you've served for our country, thank you. Thank you for serving our country. There's still 100% financing for single family home. And even if it's an investment property, up to 4 units, 100%. Of course, there's some things in the programs, right, that we have to discuss with the lender. But the highlights of it is that really all you need is 3 months reserves. And the lender requires that you have a property management that's going to take care of the units if you haven't been a landlord yourself before.
Oh,
Isn't that interesting?
Yeah.
Yeah.
It's a good program.
It's a great program for veterans. Also for single family homes, condos, and townhomes, the minimum down payment is 20%. What interest rate you're asking? Anywhere between 7.5% right now and 7.65. 2 to 4 units investment property is 25% down, and the interest rate will be somewhere about 7 3/4, 7.75.
That's interesting. 2 to 5 units, you said.
2 to 4,
2 to 4,
25%.
25% down. But there is a way that you can get that rate even lower, right?
Ooh.
Right?
Yes.
What program is that? What can you do there?
Well, okay. So there are some ways of house hacking. And I'm not sure if you guys understand what house hacking is. But literally, if you have never owned a property, let's say, right, I'll give you an example, and now you want to buy your first property, but would like to be able to offset your mortgage payment, most first-time buyers who want to do that right now, what they're doing is they're purchasing something like a duplex, anywhere from 2 to 4 units, where now you can live in one of the units. So now it's still considered your primary home, and then rent the other units that you have left. So let's take a duplex, for example. A duplex, if you're house hacking, that means it's going to become owner occupied, right? Rate changes and minimum down payment changes. So if you're purchasing, let's say, a single family home or a duplex, you can come in with a minimum of 15% down, okay? And the interest rate is about 1/4 point less than if it was an investment property. So just about a quarter less.
Okay.
If you're going to 3 to 4 units, and you guys were staying within the 2 to 4 units, because anything above 4 units is considered commercial, a whole nother world, right? Different, whole more down payment, also much more interest rate, higher interest rate. But if we're just discussing 3 to 4 units, for owner occupied, you live in 1 unit, you rent the other 2 or the other 3, it's 20% down. So SFR and duplex, 15% down, 3 to 4 units, 20% down.
Okay. Okay. So as you can see, there are plenty of different strategies and financing options available to you when purchasing an investment property. Whether those strategies enable you to achieve your goal and what you're setting out to do will depend on the numbers. And it's important to review those numbers with your real estate agent, your lender, and your financial advisor. Your team together, they're going to determine what the best strategy is for you. And once you nail that down, you can move on to showing and selecting and evaluating that investment property to see if it's a good fit in your portfolio.
This is my favorite part.
Oh, it is.
Ooh, it is my favorite.
Gia and her team here are great at evaluating and selecting properties.
Yes.
She's going to take this one away as well.
Yes. Well, we're going to first discuss a little bit about when getting into investment property, you have to make a decision which one is of the two is more important to you right away, whether it's cash flow or appreciation. Can you guys guess which state we're living in right now? Is it a cash flow state or an appreciation state? California.
I know.
Carrie.
It's appreciation.
It's appreciation state, right? That means you purchase something in California and then later, wow, right? Like I just met a gentleman that purchased his home in the 50s for $17,000 and today it's worth 1.4.
Oh my goodness.
He's like, what? Yeah. So we are in California. It's just pretty beach state, right? Everyone wants to come to California, but of course, with the pretty weather comes the pretty numbers, comes the very high numbers. So California is definitely an appreciation state. If you are looking for cash flow right away, which means that you are expected to get some rental income every single month, right? Some cash flow, passive income, you got to go out. You got to go out of California. Whether you go out of California or somewhere in like the Riverside counties, right? San Bernardino counties, more inland, the Inland Empire. And even then, some things will not make sense in California right now to get immediate cash flow. But here's the good news. Here's the good news. Good news is, this is where I love it. This is the part I love the most. There is something called forced appreciation, okay? Forced appreciation is where you can actually see a property, a building, whatever it is, and evaluate as to how you can have it appreciated, you can appreciate it faster, not by just the market, but by what you do to it immediately when you purchase it, okay? If we're going to, we're not going to go into evaluating something in numbers and investment property, because that's a whole nother workshop, guys, which we will have. Okay. Evaluating that. But more of like a walkthrough evaluation. Let me give you an example. When I'm looking at a property, right? When I'm walking through a property that I'm considering putting an offer on purchasing, I'm looking for a few different things on how to force appreciation. Okay. I purchased a property in Rose Park. We're in Long Beach. And when I walked into the property, I realized that the front unit was extremely big. It was a 3-bedroom, 3-bath. And then there was a back unit. So it was a duplex, right? When I saw it, I saw that the front unit was so large, and the way that things were, the way the floor plan was allowed for literally to put a wall, install a kitchen in the back of the wall, and now you had 2 units in the front, making the whole property a triplex rather than a duplex.
Smart.
Right? So the moment I was able to see that in the property walking through, before even, putting in an offer, I knew that I wanted to buy it. I saw the price of the duplex, and I knew how much at the time it would cost to make it into a triplex, right? And I realized that I would force appreciation very, very fast by doing that, right? Not only would I do that, but now what am I creating?
Cash flow.
I'm creating cash flow. I'm creating another unit in a property. Another property that I purchased, which I cannot believe I sold. Can't believe I sold, you guys. Bad. By USC. Can you imagine that? I purchased a duplex by USC. And this was back in 2012. Yeah, 2012. I beat myself up about it all the time. I do. But there's deals that will come. Yeah. I purchased this duplex in USC, and the duplex was a 1-bedroom, 1-bath. Each of them were a 1-bedroom, 1-bath, with a 2-car garage in the back. I walked into it, and immediately both units, I realized, had laundry area. 2 1-bedrooms had this huge laundry area that if you reconfigured the units within the same square footage that it already had, so I didn't even have to add square footage, I could make both units 2-bedroom, 1-bath each. And then just move laundry and have common laundry in the back in the garages.
Very smart.
What did I do? Forced appreciation right away, right?
And
right away.
Cash flow.
And increase cash flow. So there's definitely ways to do it. It's going to depend on the type of property, right? And it's also going to depend on your lens of being able to see what could be.
Right.
Okay. So that's kind of what we looked at when we're looking at a walkthrough evaluation for possibilities. On the sense of cost of what's going to cost you for certain things, right? Your operating costs. We're also looking at meters, for example, right? Is it sub-meter? Do each of the units have their own meter? Do they all share a meter? That's important because that'll let you know if you as a landlord are responsible for certain utilities and which utilities the tenant is responsible for. So things like that can again increase your cost, not just in your monthly cost, but also affect your passive income, are things that you absolutely need to look at when you're doing a walkthrough evaluation. But of course, operating expenses is one thing that you're going to have to really look closely at.
Yeah, I mean, definitely the walkthrough is going to tell you what utilities you're responsible for, what repairs, immediate repairs are gonna be needed. So that's gonna need to figure into the numbers. But in addition to this, you're gonna need to account for ongoing maintenance of the property, right? Just like your normal home, you have repairs and maintenance that you do to it all the time. A good rule of thumb for an investment property is 1 to 2% of the property's value every year is set aside for repairs and maintenance. Now, that doesn't mean that you're spending that every year for repairs and maintenance. It just means it's being set aside. If it's a newer building, you can go towards the 1%. If it's an older building, more towards the 2%, maybe even beyond, depending on the condition of the property. Now, I would recommend having an actually separate account for repairs and maintenance. Idea being that as the rental money comes in, you're swooping over a percentage of the rental income to account for those repairs and maintenance. The idea here is that you're setting yourself up for success, right? You're not causing a situation where if something does go wrong, you're going to need to scramble and find financing. It's especially not fun with interest rates where they are for personal loans, for credit cards. You don't want to do it. You want to account for that 1, 2% and move that money aside every single month. Now, when it comes to repairs, you also want to keep great records, okay? By keeping these records and keeping them organized, you're going to be able to see where you're spending your money and where you can potentially save money as time progresses, right? If you're seeing that you're spending a lot of money doing little chintzy stuff that doesn't really need to be spent on, then you can adjust your methodology going forward. This will help you track everything, and it also helps you with your taxes because the tax preparer, any tax preparer, is going to ask what you did to the property in the year. If you're property owners already, I'm sure you know, but just in case, if you do need to do repairs and maintenance, be sure to get quotes from multiple contractors, right? Even if you have your team set up, that's your normal repair team, always consider alternatives. People get lazy. People over quote you. They want to earn more money, right? Consider your alternatives at all times. Excuse me. In addition, be prepared for unexpected expenses. Even the most well-maintained properties are going to have major expenses come up, whether it's the AC goes out for the whole building, or you have a terrible tenant that finally got out and left your unit in such a disaster that you had to remodel the whole thing. You want to prepare for the unforeseen so that you're not putting yourself in a tight financial position. By doing all of this, 1 to 2% set aside, keeping track of your expenses, having an emergency fund, you're setting yourself up for success. Maintaining your property, making sure it's in good position, and minimizing your own financial risk, the financial risk that does come with owning an investment property. And lastly, I just want to say be patient. It takes time to build an investment portfolio with real estate. Not every piece of real estate that you see is going to be something that you should move on. Like my grams always used to say, you got to kiss a lot of frogs before you find your prince or princess.
Do I like
right?
kiss the properties?
Oh yeah, go ahead, go for it.
Okay.
I mean, make sure it's clean first, baby. Bring Clorox wipe. But yeah, with that, I'd like to open it up for any questions that you guys may have.
Any questions? Any investment questions? Let's see.
Okay.
We have some people on our Zoom as well, virtually. Let's see. We'll wait for a few questions. And as we're waiting for some questions, I actually was thinking about another thing that was really, really important to note. And again, this is like a whole nother world, right? Investment property, but we are in we're in California, and this is a state of rent control.
Oh yeah.
Okay. And we didn't go into rent control much. Again, it's a whole nother world to understand. AB 1482 is really what it is. All you have to know is that only properties right now that are exempt from rent control, rental properties that are exempt from rent control, are single family homes, condos and townhouses, and any duplexes where you live in one of the units, okay? Otherwise, any rental property that you own in California is under California's rent control, okay? Just to make that very clear. That's one. Two, another thing to mention is that there are cities that have their own rent control ordinance. So you got to check out when you're looking into purchasing a property, or maybe if you're a property owner already, you want to look into your city to see what kind of rent control ordinance they have, if any. Because if they do have one, then you're going to have to lean on that one and not California's. That one supersedes California's. Long Beach doesn't have a city rent control, right? So we just fall on California's rent control. So that's really important to know when you're even looking into a rental property in a specific city.
Very important.
Very important, okay? Notices are very important too. Whole nother world. I don't think we have any questions so far. No, we don't. But if you guys do, please know you can always reach out to us. Our information is down below. Also, don't forget to like, comment, and subscribe to our channel. We're going to be putting these workshops. We're actually starting also some seller seminars coming soon to just unveil everything you have to know of where's the market at today, so that you guys can make the better informed decisions on when to make any real estate moves. So thank you so much for joining us today. And don't forget to reach out. Have a good one. Bye-bye.